Appreciate you checking out this video about the London Breakout strategy. So what is it? I'm sure you've heard about it. What it does is it takes advantage of that trading range that sets up generally during the Asia session in Forex. Some people call it the London Daybreak Strategy, but whatever you want to call it. All it is, it's a day trading strategy, and it looks for the trader to be active during the first 3 hours of the London market session. Now, before we go into how you trade it, I want to offer you this free guide to trading price patterns. And it's actually been one of our most downloaded giveaways. So I hope you take advantage of it while we're still offering it. Anyways, how do we trade it? Well, first, we want to define the trading range that occurs during the Asia Forex trading session. You want to mark off the highs and the lows of that range, essentially the support and resistance zones of the session. And you can also use the closing prices as opposed to the highs and lows. And generally, use bracket orders to catch the breakouts to the upside or the downside once London opens. Now, that's the general way of trading it, maybe not the best way of trading it. So what I want to do here is break down further details about it. First of all, why does it work? Well, work is subjective, but what we're looking at is when the London session opens up, you're seeing the opening of a major financial center. And because London's a major financial center, a lot of trading volume will step into the market when it opens up, and that causes volatility. And when you have increased volatility, you will see increased trading opportunities. So remember, at the open, there's no other real financial center open other than the smaller volume Asian market. So the competition for market direction is not going to be as strong. Now, once the US trading session opens up, we call it the overlap session with London, you may see less price movement. So as the session goes on, the volatility may change. So you want to ensure that you have another trading strategy, if you're going to day trade, that you can use after the initial opening price movement. So first off, you want to define the overnight trading range. And there are two main ways you can define it in the Asia session. In this example here, we're looking at using the extreme highs and lows of the Asia session in gray, and here using the closing prices in the green. So does it really matter which one you use? Not really, although I prefer to use the entire range of price that sessions have had. And there may be merit in using a closing price if it's going to give you a quicker entry, but that really depends on your trading psychology. Some traders might need a little extra confirmation that breaks of the highs or lows, so the extremes, may give you. But the key is, regardless of which one you use, is to be consistent in your approach. Okay, so we don't want to flip between them if one day the closes work better than the extremes. So how do we trade it? There's actually two main methods to trade it. One, you can fade the pre-London range breakout, or you can trade the breakout when London opens. So with the first method, fading the range, it's going to require you to determine the Asia session range. We want to leave that last hour before London opens to see if there's a break prior to the opening. Okay, so this is going to require some kind of knowledge of price action, and you can easily acquire that. The second method is the standard bracket order with stop orders, and you go with the first one that's hit. So fading the pre-London breakout. So remember, we need to see what happens to price during the last hour of the session prior to London opening up. So what we're looking for is a breakout of consolidation during Asia to set us up for a London opening fade. So what do? We want to mark off the Asia session highs and lows up to the final hour or before London opens. We want to look for a break of the range in either direction. And if price fades the breakout direction, you take a position. Now, some trading rules you might want to use for fading the Asia session breakout is to wait for the first 5 minutes to elapse. So for me, look for structure you can trade against. So in our example here, the breakout to the upside formed a range, a trading range, and an obvious support level as price based at high. So there's no need to wait for 5 minutes to pass, as you can just sell stop the lows of the range and be part of that down move because we are looking to fade. Now we want to learn how to take profits, and you know what? There's a lot of techniques you can use. Simple is taking profits at support or resistance, or even at a multiple of your risk. Other traders, they might want to use a trailing stop or a time-based stop. Now, price action traders, they would read the price action and look to exit when momentum is starting to go against their trade. But whatever you choose, again, we have to be specific and consistent in our trading rules. The London Daybreak one, the standard way is to bracket order the highs and lows and just see what happens. And to that one, I say no thank you. That's flipping a coin. How about you choose a trend direction and trade a breakout in that direction? Right here we have a 15-minute Forex chart, and the 1 hour time frame shows us in an uptrending market. So again, mark off the session highs and lows. We look for price to close outside the range in the direction of the longer term time frame. Place a buy stop above the highs of the first candlestick that closes. Your stop loss can go below the breakout candlestick. So we put the odds in our favor by implementing trend direction as opposed to a coin flip for the breakout direction that we're going to trade. So what currency pairs are we going to use? Well, we want to consider that we're trading an overlap of the Asia session and London session. So look at combining those. For my money, we can look at the British pound. We can look at pound US, pound yen, and of course the euro, Japanese yen, and even the euro against the pound. Now, you never know which one's going to perform well on any given trading day. We never do. So you can actually have all the pairs up, but just take which one looks best. That's a bit subjective. You'll find out which one's best for you when you test it out. And that one would be the better one to trade. And if you only feel comfortable trading one FX pair, consider the pound US just for liquidity issues and the big money interested in that pair. So let's wrap it up. Simple. It's pretty common looking for this breakout. The breakout strategy here, I think it's a decent one for a few reasons. Number one, we do see an increase in volatility when a low volume market meets a high volume market at London Open. Think of when the futures market's open, right? We get all that influx of orders. Same idea. There's simple rules you can follow with this. We know trends begin with breakouts, and you could actually get involved with a moving market. You have two strategies to trade. You can fade the move or trade the general breakout strategy, or combine the two. Maybe there's no fade that day. But as always, ensure you test out your rules, including your stop placements, your profit targets, and we have videos in our channel about backtesting. And for my US traders, the London breakout happens when you are asleep. Okay, but these rules that we've been talking about, they can apply to the moment that the New York session opens alongside the London one. All right, I hope you liked the video. Please subscribe. Give me a thumbs up here. Any comments, questions, put them in the messages below, and I'll get back to you.